Excellent. We're live on YouTube. All right, officially, good evening and welcome to the first webinar of 2018 and a happy new year to all of you. Wishing you all the best for the new year. Hopefully, we're going to be able to correct some mistakes that we made in the last year and improve on the good things that we did in the last year. All right, so I'm very excited about this year. I hope you guys are as well. There's so many setups, so much money to be made in the year ahead. So let's get right into the business of the day. Well, let's start first by how you can get a hold of me. Firstly, if you'd like to follow me on TradingView, this is my profile on TradingView. It is vmanena at gmail. Vmanena, just vmanena on TradingView. This way you can find me. All right, and also if you'd like to send me a text, contact me regarding the course. This is my email address here. I'm going to put up my email address on the screen. Okay, so my email address is vmanena at gmail.com. That's my email address. Okay, and if you prefer a text message, you can send me a text on +27827966324. You can use this number for either Telegram, WhatsApp, or a normal text message, or even a normal call if you like. I would always respond to all the emails. There's no email that I will miss. If I do miss it, you will see that I would not have responded to it within 24 hours. If I don't respond in 24 hours, please just resend the email again. On Telegram, this is where you will find the quickest response. If you send me a text on Telegram, that's where you'll find the quickest response. All right, so if you're looking for the video link, I usually post it on my TradingView status under here. I post it here. So this is where you will find the link for the webinar, and also the link for this video will be available under my status on TradingView. Okay, and lastly, just to show you where else you can find me, this is where you won't miss me. This is my Telegram channel. It's called Trading Waves, right? And that is the link there. It's t.me/trading_waves. All right, so that's where you'll also find the link for the webinars and also the videos after they've been recorded. That's where you will find me. All right, so let's get right into the business of the day. So in terms of the course, I'm not going to spend much time talking about the course. The next course is starting on the 5th of February. That is the first week of February. If you want more details on the course, send me a text, contact me according to the two methods that I've shown you here. Then you'll get more details, because I can't spend time talking about the course here. This is the time that we spend analyzing charts, talking about the market. So that's where you will find me. I think now we can get into the business of the day, which is charts. All right, so in terms of how we work this year, we will do the normal market analysis on Sundays, which will possibly be this time or an hour earlier. Depending on what people require, it may even be on a Saturday. But for now, this is how we're going to do this. We're going to do it on Sundays. And what I want to start doing as well is to give a detailed analysis of one pair per week, taking it from historical data all the way to a 1 hour chart, where you can actually find a trade. So just maybe once a week I'll do that. All right, that's something that we do on a daily basis. Oh, flip. I see I was not recording it on this site, but it was live on YouTube. Niraj, thanks for reminding me. It's a new year. I forgot the old tricks of the last year. But okay, we're recording now on this site. We're recording now on Zoom. I'm just glad that we didn't miss anything because this is live on YouTube. So YouTube would have picked up the first part of the recording. All right, so that's a nice part of having double protection, so to speak. Thanks, Niraj. Right, so let's carry on. Right, so I hope you spent your time wisely last year, learning and improving yourselves. All right, so now we've got the formalities out of the way. Let's get into the chart. So I'm going to start with the chart that I've been starting with for the last 4 webinars. That is the correlation between Euro US dollar and the DXY, and just see how that has been progressing so far. All right, so I'm going to open it up, and we're going to discuss both the DXY, the dollar index, as well as the euro index, Euro US dollar, as soon as I can find it here. Okay, it's just some of the ideas that I usually post on TradingView. This is the gold and US dollar correlation. It's very interesting. We're going to discuss it as well. The US dollar gold correlation. All right, now I'm just going to try and find this one. There it is. So we've always started with the webinar with the dollar index and the euro US dollar. If you remember, this is the chart that I posted on the 17th of November, showing the correlation between the euro, US dollar, and the dollar index. You can see they are inversely correlated. Okay, peak for peak, inversely correlated. Peak for peak, inversely correlated. So what were we looking at here on this pair? If you remember here, this I'm going to show this on a chart where this wave 3 and wave 4 comes from. So what we had here was something like this. We were looking at this wave 4 as a 3-wave structure like this. 1, 2, 3. Obviously, the opposite, the complete opposite was happening on the dollar index. Right? Wave 4 was correcting like this. So we were projecting that this wave 4, after it ends, we're going to get a wave 5 like that. And then we're going to get a wave 5 in the opposite direction, obviously, because they're inversely correlated. All right, so I'm just going to click play and see how that has played out so far. And then we discuss. Okay, so I'm going to clear this so that you can see how it played out. All right. It was on the 17th of November. Just note that these lines, as much as it looks like we're reaching these targets, these lines were not actual targets. I'm actually projecting much higher on these pairs. All right, so as you can see here, what we have projected, we've been projecting that this will go up from here. We knew that this was going to go up from right here. This was going to go down from here. This was going to go up from here. So you can see that is playing out to the peak. Well, so but then we wanted this to go up as a wave 5, but now it did not go in 5 waves. As you can see here, we've got 1, 2, 3. You've got 1, 2, 3. It is not an impulsive 1, 2, 3, 4, 5. It's 3 waves. So when I saw that happening, I kind of thought now that these may not go immediately. All right, so after the 3 waves, we expected the correction in 3 waves, which we got. Same here, correction in 3 waves, which we got. So after the 3 waves, we got another 3 waves. Okay, just undo that. We got this move up here. I'm going to show you something interesting about this move and why I'm doing this as a correlation, right? So if you look here at the top of wave 5, you can see that the euro US dollar has already tagged the top. It has tagged the top. But look, the dollar index. The dollar index has not tagged yet. So which means the dollar index is lagging the euro US dollar. So if it is still lagging, I'm anticipating that the dollar index, let me undo that. The dollar index may still get a move down to complete this come and tag here, while this may actually wait for the dollar index, even if it will come down and do this as well. So it may just touch a bit. After this, then they will be in parity. But then when we get to these levels, I'm anticipating a reversal. I'm anticipating a reversal both sides. And I'm going to show you when you go to the dollar index, not to the euro US dollar, why I'm anticipating that this will be a reversal. I think everybody is happy with this part. So let's go to the actual chart. But I'm now going to be looking only at the euro US dollar chart, right? I'm going to be looking at the euro US dollar chart. So whatever I'm doing on euro US dollar, just know that is the complete inverse of the dollar index. So correlations is not a blanket approach. There is a lot of things around correlation, right? Let's clear all that and look at euro US dollar. We've got so much to cover tonight. I'm going to try and go as quickly as possible. I'll just show everything off here. I'm going to go straight to the 4-hour. Okay, before I go to the 4-hour chart, this is the impulsive move that we're looking at. 1, 2, 3, 4. So this wave 4 here. Let me go to the daily chart. Daily chart. It's actually the daily. I'm going to go to the 4-hour chart. Euro US dollar 4-hour chart. Load it up. Right. Let's show there. Somebody is doing notations on my screen. Right, so that is the string that we had from right at the bottom there. So this string, we label it like this. We label it as 1, 2. You can see there's a 1, 2 internally here, and then this one was a 3. This was supposed to be the 4 that we were looking at, that it goes. Okay, right now it's going, but I do not think that it will go out. It will go in a straight line like this. But there is a possibility that it may do that, even if it can go trend in 3 ways. But I'm gonna explain what I'm talking about by that. So we've got 1, 2, 3, 4. We've got a 1, got a 2, we've got 3, 4. Okay, you can keep on labeling it lower and lower. So we're looking at this 4, but obviously this 4, if it is not the actual 4, that doesn't change the structure. What will be happening is that you are going to have, this is what I was trying to show on that screen there. 1, 2, 3, 1, 2, 3, and then impulsive move down. But that will not change the structure. That will simply mean that you're getting a regular flat here before you get a wave 5. See? So here we're at a critical area. We're at this level here. So we'll be anticipating a reversal. Either a reversal, or if it starts correcting, then we're going to get another push higher. But for now, let's watch what happens in this area for a move down. And if it does make a move down, that means that that's your wave 3, that is your wave 4 structure at all. And this will make sense that you're going to have a flat correction as your wave 4. Okay, that's the 4-hour chart. So let's just drill in there on the 1 hour and see what is happening here in this area. See whether we're getting any sense of reversal. Remember, this one has reached has tagged the top, but the dollar index has not tagged its top at the bottom. Right. So we are now on the 1 hour chart. We're focusing right at the tip. Okay. So our guys already spotted that we may just be getting a corrective structure like this here before we get a last push high. Let's do that. Let's see if we're getting any divergence there. So divergence is not the be all and all of trading. It's just the tool that we use, and we do not use it everywhere. We are getting the divergence there. So we may get a push higher before we actually get the reversal. So that's what we're going to be looking at here. So during NFP, let me just show you quickly what we're looking at during NFP. We're actually looking for this reversal on the 15-minute chart, because we had reached that level. So we got this move down during NFP. Right? And when we went to the 15-minute chart, it was quite clear. This is how you get a trade from the highest time frame to the lowest time frame. You can even trade the 15-minute, the 5-minute, even the 1-minute chart, as far as the human eye can see. So we could see this impulse clearly that we could not see on the 1 hour, the 4 hour, as a reversal. So we had that impulse, right? And then we had this reversal here. Okay, so before NFP on Thursday, we were here. We were here. I'm going to use green here. We were here. And then we said that this is actually just making a correction here, right? And then we will anticipate that if it does this, we're going to take it down. So either we're going to take it down, either this was going to be a three-wave correction for a further move up. So we anticipated that this would go up first before it came down. So when NFP results were released and this came went up here, we knew that it was just time to sell because we had anticipated that we were going to get this move up, which was just confirming what we had analyzed the day before. Right. So now we've got the impulsive move down. And remember, we're on the 15-minute chart. So we need to see what happens here. If we're going to get something like this. If we get something like this, then it means that euro has already started the reversal. So look at it on the 15-minute chart, what this structure gives you here. Right, so the 15-minute chart, so it will play out much quicker. All right, so that is euro US dollar. That's how you're going to look at it. Okay, US dollar CAD. Go back to the 4 hour or the daily. Go US dollar CAD. Okay, so US dollar CAD, of all the pairs that we analyzed on the last webinar, this is the only one that we got wrong. And the nice thing about Elliot wave is that when you get a pair wrong, you can understand why after the structure has played out. So let me just show you quickly how the market works. So I've shown this last time. So normally you would have an impulse and a correction, and then another impulse. If you get another correction here, this is telling you that you are still ready for a move up. Okay, you're still loading momentum for a move up. But how do you know that you're getting a reversal? You will know that you're getting a reversal when the market gives you something like this, an impulse, and then another correction. So if you're getting an impulse and a correction, you know that the next move is going to be down. So what has happened here? You've got 1, 2, 3 structure, right? 1, 2, 3 structure that is correcting this one. So you knew when you had an impulse here that this is a reversal. What should happen after this? You should get the same structure again, going up. And essentially, what this does is simple. It's just 1, it's just 2, it's just 3 waves, A, B, C. Okay, so how do you know that you're going to get a reversal? You're going to know that you're going to get a reversal when you get an impulse here. And the correction here. Okay, so we actually thought that this whole thing was doing this. And if it was doing this regular flat, it was supposed to go. But it only made another, remember, 1, 2. I want you to understand this clearly. Remember, 1, 1, 2, 3, impulse. So this whole thing is if it's a correction, it's because it's 3 waves. It can be corrected also by 3 waves, like that. So you've got your W here because it's 3 waves. Then you've got your X here. This X is correcting this W before they move. Let's take this out, get some more space, so you can understand how we got this one wrong. So this is why we use risk management, because you're not going to get everything 100%, and the market is always right. We make mistakes. Obviously, we're going to make mistakes because sometimes you don't have enough information. Okay, so you're going to get something like this, WXY. You've got the correction, you've got the correction. Right? You've got 1, 2, 3, you've got 1, 2, 3. Right? So this here, this 1, 2, 3 here was correcting this before the move down. 1, 2, 3 correction before the move up. It's just that this one is bullish, this one is bearish. So we had the reversal here. Obviously, we didn't quite get it because we bought right at the bottom here. We wanted to buy here again, okay, but it did not play out like that because of this structure here. So now, how are we looking at this? We're looking for a deeper correction any point now. If you get a correction, this comes down to this level, okay, who knows? It may even come back here and retest this top. And if it's doing that, if it does that, then it's giving us a regular flat for another move down. So which means that daily move to the downside. Remember, we've been trading this on the daily. The daily move to the downside will now continue, but it doesn't continue in a straight line. So this is what you would have. You have that impulse, you're gonna have that, right? You've got 1, 2, 3. You're gonna have this as a 1, 2, 3, that level or expanding there. So if it does that, then you still get another move down. Okay, so that's how we're going to be looking at this. So look for continuation on US dollar CAD. Right. So last week we got almost 96% of the analysis right. But just remember that what we do here is the easy part. It's easy to forecast the direction. Everybody knows the direction. The challenge is how to trade the direction. Okay, so here we have US dollar chief giving us 1, 2, 3 waves. Another 1, 2, 3 waves. So last week we were around this level. When I go to the 4-hour chart, we said we wanted it to go up a bit more before coming down to this level, which it actually did. Okay, because we wanted to get something like this to come down to this level, and then to this level. Okay, then that will be 1, 2, 3, 1, 2, 3. Right. But let's go into the 4-hour chart and understand the structure, because we've got 1, 2, 3 here. Go 4-hour. Do you favor and watch last week's video? Not last week. The last video I did for 2017 was on the 18th of December. Watch that video and go check the charts. You will see how accurate this has been. So this is where we were. Remember, that was the 1, 4, 3 that we're looking at. We had a 1, got a 2 here. Okay. And when this was dropping here, we actually had something like this here. 1, 2. So the analysis last week was that we're going to get, we said we're going to get a push higher before this move to the downside to come and retest here. As you can see, we got that move to the downside. So go watch last week's video. You will learn something here. So when we retest here, so now we've retested here. What are we anticipating? We're seeing this move to the upside. This is the move that could be coming here for this flat correction. And if we get that correction, we may be getting this one here. That may come all the way to test the one at the bottom here. You see, then that will just be a 1, a 2, 3 waves. Who knows, when it comes here, we may get another move to the upside. But remember, we are forecasting way ahead when we're here. Right now, we've got enough information to tell us that we may be getting a move to the upside in the coming weeks. So let me just go into that structure. So right now, what we have here is an impulsive move up of the impulse, and now we're getting a correction. We're getting this correction here. And we're getting another one here. So who knows, what you could get here is something like this in green. Another one back up. So look for upside when it starts correcting like this, but that upside may not last long. And I'm just trying to focus this correction, but it's easier to just trade the completion of this correction. Then after that, you're going to get that move to the upside. As you can see, that is just yellow, correction, yellow. A, B, C, easy. And if you have to label it further with red, you can see here A, B, C. See here, I'm going right into the details. So it's easier to trade just the breakout of this correction. When this structure breaks out of here and gives an indication, then you can get this move to the upside. Okay, that's US dollar chief. Now let's talk about gold. Gold is also one of the US. I'm actually doing all the US dollar pairs right now, and gold is actually a dollar pair. Right, so if you did not get this trade on gold when I did the webinar on the 18th, then you missed out on a lot of pips because I actually gave a signal. I usually don't do that, but last week here I said buy right now during the webinar. You can go watch the webinar on the 18th. I said buy right here, put the stop loss there. Right now you are already in. You should be in so many pips. Let's just measure those pips. It's over 600 pips, over 650 pips, and this is not done yet. Okay, why am I saying it's not done? We're giving this sort of let's undo that. We're getting this corrective structure that may just do this and give you a move further up, right? But protect your profits. If you took it, congratulations to those who took. I saw some guys on the free group telling me that they took the trade and they're making so much money. So that was gold and euro JPY that we made so much money on over the holidays. Okay, so why did we buy here? It's easy to just say we bought here. Obviously, you saw that we were buying it, but why were we buying? So let's go into it. If you've been watching these videos, or if you've been following these webinars since July, you know that I've been doing a gold analysis almost every webinar. Right? So if you've been following or you've watched the YouTube videos, you would see that I've analyzed gold on almost every webinar that I did. So what are we looking at on gold? Gold is a very interesting pair. So, and when I say interesting, I mean a clear structure. So this is what I was looking at. So we had this move to the upside and the correction here in 1, 2, 3 waves. Okay, so I was anticipating that I'm going to get a move that is equal to this. Okay, so let's look at it. Am I getting that move? Did I get what I was looking for? Why was I looking for that move? So if I was to put in numbers here or letters here to label it, obviously letters don't mean anything if you don't understand the structure. I was looking at this as a WXY. Why am I looking at this as a WXY? W is a 3 wave, the 3 wave structure. So here we've got a clear 1, 2, 3 wave structure, and you can see this structure. You've got this one equals to this. Okay, so the W was corrected with the X. The X should be in the same degree. So you can see here we've got 3 waves on X like that. Okay, so when I first did the analysis, when I had the structure like this was before all of this played out. When we just had, when this was still going up here, we're actually trading this move to the upside. I said I'm anticipating a 3 wave structure that will do something like this. The only thing that I didn't know was the type of structure that was going to form here. I'm going to get a 3 wave structure. Why? Because I had a 3 here. I had a 3 here. I needed to get another 3, WXY. Okay, so how is this? Did I get my 3 wave structure here? Absolutely. This is how I got it. Even though I did not do the zigzag, here I got the zigzag. What am I getting this side? I'm getting something very interesting. I'm getting this, I'm getting this, I'm getting this. So last week when I said buy gold, this was the projected target around the 383 area. So what have I just done here? What I've just done is that this whole thing is a 3 wave structure. which is a W, a correction in the middle. I've got a zigzag. This is a zigzag. This is your zigzag. A correction in the middle, which is a regular flat. You can see the regular flat there. And now I've got another apparent looking zigzag here with a target at 380, around the 380, area, basically at the equal legs of this. Okay, easy like that. So what do I have? I've got simple 1, 2, 3 waves, which is still my original WXY. Okay, I always say I trade differently. So this is how we do Elliot wave. This is some of the things that we teach in our courses. You see how clear this is. So now, am I going to get the 383 in just one go? I could or not, so, but I would be anticipating that we get a deeper correction to load up more momentum. So I call corrections a loading gun. So I should get a correction here to take it further there. So if you get a corrective structure like this on gold, remember we're on the daily, you can even get it on the 4-hour chart. So look for continuation pattern for a further move up on gold. Okay, so we're still bullish gold. Very easy structure. So then now the question is, why am I looking at this as a corrective structure? So you guys only see the last piece of the analysis. You do not see the rest. So let me just try and show you a little bit of what I look at. See here, when I look at the bigger picture, look at this. You see something very interesting? You see here, okay, I'm not going to go through the historical data because all these things comes from historical data. I've got a 1 here. I've got a 2. And this 2 is a regular flat. Right? So I've got a 3, I've got a 4. And then I've got here, what do I have? Let me do the lines with the different colors because we're using a lot of yellow. I've got this. Look at that. Okay. What have I just done? 1, 2, 3, 4. 1, 2, 3, 4, 5, which is an ending diagonal. And then what do I get? I'm supposed to get an A, but these 3 waves, so I'm going to call it W. We don't label 3 waves as an A because an A, if you know the rules, is a 5-wave structure. So it's a W, 3 waves. Right, so now let's not do the letters. Let's do the structure. So if that is a W, this is how my W looks in yellow, right? But then I've got something that is in the lower degree here. Okay, same degree as this one. You see where this corrective structure comes from. W, X, and what am I anticipating when we reach the end here? The end is not I want it to reach here. This is why my target is here. Probably retest here, the last level, which was 376. Probably retest and make a move down like that. That will give you a flat correction. Come retest that. Another. What do you get there? You're getting a WXY. You see what I've done here? I've just given you an analysis for the next year or 2 on gold. Obviously, it's not going to pay out in 2 weeks, but you know the long-term view of gold. What do you have there? You've got a clear regular flat there. Clear regular flat. WXY. 1, 2, 3 waves. 1, 2, 3, 4, 5, A, B, C. That's what you know. That's what you've learned, but you do not know this stuff. This is your B, which is in 3 waves, lower degree. You can go lower and lower. Okay, so that's how we do analysis, and that's how we make money. Right, so that is gold. That is now let's move away from gold. So there's no new trade on gold except to wait for a deeper correction here. But before that, let me just show you how you could have entered and how you could enter. Let me just try to get to our chart and see this whole thing. So if you know how to trade and you've got a strategy, you would have hopped on. You would have had a lot of opportunities to hop onto this one. So this is the first piece that we missed, this reversal, because we're not always on the chart. So if you were on the chart and we looked at this, actually I was on holiday when this was happening. I did not trade this. If I was on the chart, I would have taken this from here, right? But we missed this part. We also missed this part. But that's not a problem, because after that happened, we got 1, 2, 3, right? So after getting that 1, 2, 3, which is a regular flat, we started getting this move up. This is where I said buy, because I could see that we have got the reversal, the cycle has ended, the sequence has completed. It was time for a reversal. Okay, so then it was time to buy gold. Okay, so that's how we're looking at this. If you can just hold on for me for 2 seconds, guys. There's somebody knocking on my door. Just give me 1 second. I'm gonna go attend this. I'm just gonna pause on this side. I'm gonna be back right now. Okay, guys, sorry about that. Just resume the recording on this side, and then we carry on. Right, we're back on. So this is why we bought here. Okay, so if you had missed here and you had missed here, you would still have bought here when you made this corrective structure here. You would have taken another trade here. But by this time, we were already moving our stop to break even, because initially our stop was here. I said put stop here, we moved our stop here. So now we were just riding this trade risk-free. Look at this here. Correction, we move the stop. Correction, we move the stop. Correction, 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 correction. This is all the places that you could have taken. Here, this one was not so clear, right? But you could have taken a trade on all of this, space. So in the group, because we knew the cycle, one of the guys asked in the group when this was doing this, when this did this and this. I said, oh, and they said gold is reversing. Right? So now it's giving a signal that you're going to sell. But how far are you going to sell? You will know that it's not going to go all the way, because you know the cycle has and the sequence is not completed. And that's something that we teach in the group with the cycles and the sequence. So this was just a 3-wave pullback before we move higher. So what are we getting here? You're getting something like a 3-wave pullback that could do something like this before we move further higher. So we're still bullish on gold, not reversal yet. Okay, right, so let's move on gold and go to New Zealand dollar. Let's complete the rest of the page. New Zealand dollar, US dollar. So New Zealand dollar, US dollar, also one of the pairs that I have been hammering on for the last 4 months. For the last 4 months, I've been doing analysis on this pair. Right, so I'm not going to do like gold where I show you where. So I was just trying to stress the point that you guys are only seeing this part. And if you're only seeing this part and you don't know what the rest of the analysis is, you're always going to be wrong. You're going to be wrong 8 out of 10 times, because you don't know the direction of the market. So here, we're looking at this impulsive move. And then we're looking at this SA. So this was what I was looking at initially. We look at the previous videos. I was saying that we're going to have a 1, 2, and we're going to get a 3 like that. Okay, and that will just be a ABC structure after that impulse, right? But what the structure changes, like when the structure changes, actually not the structure changes, when the market plays out, it gives you a clearer view. And this is what happened here. Nothing has changed. It was just showing us the correct degree of the market. And in this case, after this did this, we said we are now looking at this as a regular flat here. Actually an expanding flat, because it breaks the top, breaks the bottom. So now we've been anticipating this reversal for the longest time. So we got this reversal. Even on the last video, if you go watch, we said we were actually here during the last video, said this corrective structure, let this corrective structure form so that you can hop on the bus if you missed it right at the bottom. So what are we anticipating? We're still anticipating the same, which is this move. And that move is an ABC. Three-wave structure with a corrective structure in the middle. Okay, so that's the daily chart. So let's just go where we got the trade 4 hour. Now I'm coming to look here. Yeah, so we got the reversal. It was a clear reversal. We got an impulsive move, 1, 2, 3, 4, 5, A, B, C here. After that, we expect the market to repeat the same thing. So we got that impulse, and then we broke out here, but right. So last week the structure was this. There was nothing here. We said wait for this to form a corrective structure, which it did. So after it breaks out, you would have bought here. Okay, it gives you another opportunity here to take the. Okay, so anything can happen now. You can get a deeper correction that will correct all of this. So now we need to wait and see what's going to happen with this structure. Okay, so this is why I do not mind following this for weeks, for months, because I know when they start playing out, they're gonna pay. They actually pay big. Look at what gold did for us. Okay, so that's New Zealand dollar, US dollar, Audi USD. I think I did a webinar the week before the last one I did. I gave you a historical analysis of Audi US dollar. Okay, let me just show you again. And I'll show you why you will not make money if you do not know how to use the historical charts. So people just want to go to the last scene. Where are we looking at? I'm looking for Audi, AUD. AUD, not Angola Kwanza. I'm looking for AUD. AUD US dollar. Right. If you do not understand this, okay, so we're looking at it historically. And 1953 is fine. So this is all available. It's all the available market data on Audi US dollar. So as you can see here, they almost started in parity on one. So one would have been in parity, which means they have got the same value. And it has been just on the downtrend from the 1970s until 2008. Okay, so the Australian dollar has been weak against the US dollar for almost 30 years. And after that, it has just been correction. So you can see here, we've got 1, 2, 3 here. We got another move down, making this a 1, 2, 3, right? So if there is a 1, 2, 3, and we're going down here, now we're getting another 1, we're getting another 2. Okay. So if we're getting this, we're getting another 2 here, we must get another one to the downside. So what we have done here is just to establish where we are within the overall cycle of the market. What have we done? Let's say this is the last end of the impulse. You will typically call it a wave 5 if it is a wave 5, right? But then the market does not always trend in 5-wave structures, right? It can trend in 3 waves. So that's a discussion for another day. So we've got an impulsive move, we've got a 3-wave structure. So what if this is just going to give us another X and then give us another impulsive move to the upside, and that will be a flat correction. Okay, so we are currently here. Let's get the pen out. We are here currently. That is that correction that we've been focusing. So we've been in this correction for over a year or two. So we know where we are in the overall cycle of the market. And it doesn't mean that this is just going to crash in one move. But this is the structure that we're looking at. You see here, I've just forecasted for you the next 10 years, on the next 5 years on this pair. But right now, where are we? We are here on the correction. So let's go to that correction. So we know where we are within the cycle. The current move that we are in is this one. So let's go to it into the chart. Weekly. I think we're almost done with the US dollar pairs. So this is where we are. This is the structure that we are in the weekly. It's a structure. So as you can see here, you've got, I must get the yellow and clear. So we had that impulsive move, if you remember, on the historical data, we had this move, and this is where I said this is where we are, and this is the weekly chart. So how does this weekly chart look? We've got 1, we've got 2, we've got 3. You can see here we've got 1, 2, 3 in the middle, we've got 1, 2, 3 there. We're getting this 1 to the bottom. So last week when this was moving up, said look for continuation patterns to enter. So at any time here, this thing can correct and give you a pattern like this. Overall, we're targeting this level here. Okay, we're targeting this level here. But this, remember, this is a weekly chart. So many things can happen in the lower time frame, as I've shown you how the market moves. So if you do not know those small waves, it still won't help you to be able to know only the higher time frame. Okay, so that could just give you a regular flat, which is 1, 2, 3, like that. Before they move up, I mean the move down. Right? So I don't want to complicate things, but this move down can actually be a W, X, and again a double correction. So it gets complicated like that. But we don't. The aim is not to make it complicated. We want to simplify it. So we trade it as it comes. So currently we are here. So we'll only wait for any continuation pattern for this move to the upside. And this is the daily, actually the weekly. So we go to the daily and look for continuation pattern if there's any, or a correction to see how far that move is going to go. So if we're looking on the daily, that's what you could even get. So you could get something like that, daily chart. You get a correction. Don't know what type. I'm just speculating a zigzag, but it can be any correction. So we're still having this move to the upside. So currently, our USD is bullish. Wait for a correction or any corrective structure in the lower time frame on the 4 hour for the move further up, and that will give you possibly this move, this corrective structure for another move up before the move down. Okay, so that's our US dollar. I think we're done with the US dollar pairs, but we cannot do the dollar pairs and leave out the US dollar ZAR. US dollar ZAR. Okay. I've done this structure so many times. I'm sure you guys know by now every move I'm going to do on this one. 1, 2, 3. I'm not going to waste time. I'm just going to show you this. 1, 2, 1, 2, 3. And then we're anticipating. We got a 1. We got a 2. Now we're getting a 3. What is this 3? It's possibly going to give us a regular flat. What do you essentially have there? You've got 1, 2, 3, which is 3 waves. W, a connector, X. 1, 2, 3, a regular flat, Y. This is the end of the correction on US dollar ZAR. Okay, so we need to find confirmation of a reversal here, because when we reverse on US dollar ZAR, unless you get a WXYXZ, unless you get another structure like that, US dollar ZAR is going back all the way back to the 18 rands area, not anytime soon. Obviously, it's not going to go quickly. Why did I do that? Right, so unless it does this, US dollar ZAR is ready for a reversal, and it is time to convert the rands into dollars. Okay, because all of this was just correction. Okay, so this is the daily chart. So we need to see signs of a reversal here. Okay, I showed on the last webinar that we forecasted that it was going to go to 11 rand when we were here, we had this structure like that. We knew that it was going to go to the 11 rand area, and people could not comprehend the rand going to around 11. Guess what? Today we are around 12 rand 30, 12 rand 23, the lowest that we've traded so far. Right, so let's go to the 4-hour chart with US dollar ZAR. Okay, we actually tried to take a trade here, and it seemed like was actually not ready. Right, so how does this structure now look? We've got a corrective structure that looks like this: 1, 2, 3, 1, 2, 3. So we may get this coming up here for another move down. So we actually took a trade around the 1240 area, around the 1240 area. Yeah, actually here. Okay, but then now when it comes to break even here, if it comes back to break even here, we're going to let this trade go, because if it does this, it has completed a corrective structure for another move down. Right, so we're going to see if it makes another lower low and see what the indicator does. Let's just get the MACD up to take off my took off my MACD, but just look for divergence. There's already divergence, strong, very strong divergence in this pair. Let me put it back on. But remember, MACD is not a strategy; it's just a tool that we use in our analysis. Back on, show that there's very strong divergence. So the MACD can be showing you divergence. Can show you divergence for some time before you actually get reversal. It doesn't tell you where you're going to reverse. It tells you that you are at around the reversal area. So you can see here we're already getting divergence here. It's making higher highs, higher highs. As much as this can make another lower low possible here, when the divergence keeps going up, then it's time for it to reverse. So when it breaks out of here, gives you a correction, good indication of a reversal. Okay, that's US dollar ZAR. So we've done the DXYs. Let's do the yen pairs now. Do the yen pairs. So if looking at the yen pairs, I should have done this US dollar JPY together with gold, because I showed you this correlation the last time. So somebody saying don't forget USD JPY. No, all of them we're gonna do all of them. We're gonna do all of them. Right. So no, not this one. I'm looking for the correlation between gold and UJ. All right, so this is the correlation. This was on the 23rd of November. Let's play it. As you can see, gold, we got it there. We actually thought that it was going to reverse from around that area before moving up, but it actually gave us this drop. But it didn't mean anything in terms of structure. It was still quite correct. That simply meant that we have this green W here. Let me just update. This green W is supposed to be here. The X is supposed to be here. And then the Y is supposed to be here. This is just the adjustment that you would need to make as the market plays out. So you would have gotten 1, 2, 3, and then that reversal. That's why we bought here. Okay, so you can see here we're still on the move up. But then gold at the same time, you can see, not gold, here's UJ. At the same time, you can see everything has been in parity, has been in correlation, tip for tip, except for around this area. As much as this one was going up, US dollar JPY was busy doing this correction here. Okay, so what do we anticipate here? USD JPY could come retest that level. Okay, so if when US dollar JPY retest that level, possibly that will be, okay, the gold will still be going up to retest that level. Okay, so gold will come down, US dollar JPY will come down, and when it comes down, it's giving us a regular flat like that. Okay, right, so gold will then come there to that level. So from around this area, the correlation, there was no longer correlation because this one went sideways while this one was making a move. There will be a time where this will correct. One is lagging the other now. So gold made a move up. So I'm going to be anticipating that US dollar JPY will make a move down soon to cater for this move. Okay, let's just go into US dollar JPY, the chart itself. We'll do the rest of the pairs. Okay, so last week we on UJ, we already had this move. But let me show first. Why we're looking at it like that. So this is the 4-hour chart. So US dollar JPY. We had this move down. We're getting this 1, 1, 2, 3. Anticipating this move. Come retest this level. Okay, so US dollar JPY is currently bullish. So we want to wait. We want to wait for corrective structure to take us to that level. So if it does that 1, 2, 3, and we get this move down here, okay, we're gonna get that move down, then that will be a regular flat for another move to the upside before we come down. Okay, but obviously this is forecasting way ahead without enough information. For now, what we know is we're getting a clear structure to the upside. So the trade we'll be looking at on UJ is to get a corrective structure, another move up. Okay, unless this is gonna go even more sideways. If it does that, then we're gonna analyze it like that. So for now, just look for this. Come retest here, minimum target. Okay, so that's UJ, Euro JPY. I put up this structure on the last video and I asked those that are studying the Elliot wave theory to try and label this. See, it's easy to read that those free stuff on the internet, but the application is a different story. Okay, so I showed you that this is what I'm looking at. I'm looking at 1, 2, 3. Connector, 1, 2, 3. 1, 2, 3. What I have here is the first correction, which is a regular flat, connected with another regular flat. And all of this is nothing but a 1, 2, 3, W, 1, 2, 3, X, Y. Two corrections in combinations. This is what I did last week before we got this move. Right, so we should have got all of this move here. We've got all of this move because we had a W clear correction. And what is that? It's simply 1, 2. Excuse me for using the word simply. It's simple for me because I've been doing this for a long time. Okay, so it's 1, 2, 3, and then I move up. Clear like that. So before I put up my lines here, it was all just a mess. You didn't know where to start. Okay, but now when I put in the lines, it becomes clearer. Hindsight doesn't work in trading. You want to forecast. Okay, so that's UJ. So for now, okay, we're actually doing UJ now historically, and we are anticipating a further move up. So we need to get a deep correction at some point, a correction that's possibly even deeper like that than that. Or this can just keep on going up until 150. Okay, I didn't want to waste time, but I think if I don't show you why we're looking at around the 150 area, I will not be doing you justice. So let me try to show you that. That's euro. Okay, that's fine. JPY. Let's go historically. I'm not gonna waste time here. I'm just gonna do it quickly. We're actually discussing this pair just before we started. 30 minutes before we started. So what am I looking at here? We're looking at this as a impulse. You can see this started with euro to JPY at 350. Everything has just been an impulsive move down. Okay, and then after that, I'm not going to do it with the arrows. I'm going to do it with a straight line. You get an impulse. After getting that impulse, you don't get a correction. You get another impulse. And this impulse actually ends in a diagonal here, as you can see. After that impulse, you still don't get a correction. So now we use a different color. We use purple now. You get 1 here. All right. Only after you get the purple, you get a correction, which is a 1, which is a 2, which is a 3. So what are we anticipating? We're anticipating that we're going to get a further purple move. This is where we are currently. So this purple could go on and come and take this top, which is above 150, around 200. Okay, but we'll be looking for it to first retest the 150. Let me show why I put this is the deep correction that I was talking about before we get here. And then that will be 1, 2, 3, 1, 2, 3, like that. Now I've just mixed the colors. I should have used a different color for this correction here. So let me try and see if we can do it quickly. I should have used maybe the black for this one to show that it's a different degree. Degrees are very important. Right, and then now you can have your purple correction doing something like this, coming to retest the 200. So you see here, you can retest the 50 first, then you're going to have a move down before you come here to the 180 area. But what is this doing? This is long term. I'm giving you 2 years, 3 years coming from now. What we know is that we are here today. Okay, so after that, what do we anticipate? We anticipate that the purple has corrected the green. Now we come down here. Okay, after that, then your red should continue. What have I done here? What I've done here is very simple. It's an A here in red. It's a B in red. It's a C. See the B is in 3 waves green. A, C. Okay, then you get a purple correction. A, B, C. See, just the degrees are just going lower and lower. So if you know what is happening with the degrees, you can even go to the black. A, B, C. So it is very important to be able to identify the waves like this instead of just going to label 1, 2, 3, 4, 5. See, now we know where we are within the overall cycle of the market. We know we are here. Now we want this deep correction to take us to 150. We're currently around the 136 area. So if you have not bought around the 132, 33 area, there's no need to chase. You wait for a correction. Okay, so that's how your US dollar looks. So that will be the target. So you may just keep getting these continuation patterns, keep buying them until 150. But before 150, you may get a deep correction. So keep an eye on that one. So let's do the rest of the yen pairs quickly. US dollar JPY, Chief JPY. Also an interesting structure. Okay. So this one, impulse 1, 2, 3. You would want something like that before you move down. So we are currently on this level. So we may get reversal sometime soon here on this one. Okay, we are here at this level, so keep an eye on that one. Chief JPY, Audi JPY. Audi JPY, look at this. It's an expanding flat. Okay, so these may still have more upside to come. So keep buying continuation patterns. Okay, Audi JPY, New Zealand JPY. So New Zealand, like the rest of the New Zealand pairs that I've been talking about for weeks, Remember, New Zealand US dollar has reversed. All of the New Zealand pairs, New Zealand CAD, New Zealand Chief, have reversed because of one similar structure on almost all of them. And this is the structure. Here on the weekly, if you remember New Zealand US dollar, I was anticipating something like this, and then I got this, the regular flat here, which is an ABC. This is why I was saying you're buying the New Zealand JPY. So you need to look for continuation patterns here for a move up here. Okay. This is the weekly. So look for continuation patterns. This is making a regular flat here. We've got a regular flat. All right. So all the New Zealand pairs are like that. So that's how New Zealand JPY looks. Let's look on the lower time frames. Go 4 hours. See how it's playing out. If you're getting any continuation pattern. Okay, it's just an impulse. So you need to get a correction if you want to still enter. Okay, but this reversal would have given you so many options. But here it looks like it started with an expanding leading diagonal. Okay, but because you could have bought it here, you could have bought it there. I think here you would have got a clearer impulse. Here it looked corrective, so you would not have bought here. You would have thought it is correcting for a move down. So when it got this impulse, actually last week it was making this impulse. We said, let's wait for this to finish correcting so that you can buy. If you watched the video last week, and you like trading New Zealand JPY, you should have taken it there. CAD JPY. So that is CAD JPY. CAD JPY. This, I could have been looking at this as a flat correction, but this move is impulsive because on a flat correction you need to have 1, 2, 3. You need to have 1, 2, 3. So this one looks like an impulsive 1, 2, and then a 3 here. So you'll be anticipating to get a fourth wave for another move up. So wait for a corrective structure here for further move up on JPY. Okay, so this cannot be a running flat. This cannot be regular flat because of the personality. Also look for continuation patterns there. So that's CAD, JPY. I think we've done all the yen pairs. Now let's do the pound pairs. So we start the pound pairs by doing the last yen pair, which is pound JPY. So last on the 18th, I put up this chart and I showed you clear fractals. I put it up like this, clear fractals. Same thing happens every single time with this pair. So you get an impulse. After you get an impulse, you get 3 waves correction. 1, 2, 3. Right? So you get another impulse. Like that. What do you get after that? Here you got a zigzag. And now here you're getting a 1, 2, 3. Which is a regular flat. And we traded this pair, if you remember. We traded this pair looking at this pattern here, which was a Gatli here. We bought it right at the bottom and got all of this leg, which was almost 1,200 pips in a matter of days. Okay. All right. And then, right. So we get another impulse. What do we get? Another 3 waves. Pull back. 1. Why is it moving? I'm trying to get there. Drawing tool here. Right. 3 waves. Pull back. You will see that this one looks exactly like this one. You see here, this move was impulsive here, and then it corrected. Here it was correct, impulsive, and then it corrected. And then this one was very, very slow. This was very slow here. Same here, it was very slow. And we traded this leg as well. So there was fractals here, very clear fractals, right? So then last week we were here. Last week we were here on this impulse. Let's do it with yellow. We were on this impulse. And I said, you cannot 1, 2, 3 times. You're not going to miss it the fourth time. We had this corrective structure here doing this. I said, you cannot miss it the fourth time. Now you've got the 3 waves pullback, and it was time to get a further move to the upside, which is these pips that we got. Okay, so now we'll be anticipating that this will possibly reverse like that, 1, 2, 3, or another move up. Okay, so this is actually making some kind of a diagonal. I'm not going to discuss here now. Let me clear everything. It is making some kind of a diagonal. Don't have time to actually discuss everything here. But you can see that it's making a diagonal with this being a 1, 2, and then you're going to have a this 1, 2, 3, 4. We're anticipating a 4 now, a move. So yeah, let's do this. 1, 2, 3. Remember, diagonals move in 2 waves. In 3 waves, sorry. 1, 2, 1, 2, 3. We'll be anticipating that we get a wave. My tool is getting stuck. A wave 4 here. Okay, that's why we're anticipating another move here, giving us 1, 2, 3 before we get a 5. Right? So pound JPY is at the reversal area. No new trade at this stage. Wait for any signs of reversal. See if there's any signs of reversal on the 1 hour. Reloading that. Okay, not very convincing. We've got this move to downside, so you need to wait for a corrective structure. On the 1 hour, you need to wait for something like this to confirm that we're actually going back. Okay. Right, so I forgot to show you that pound JPY also last week. This was actually the trade here. Let me show you that one. Just go back one. I think pound JPY, there was a pattern. Was it actually, yeah. Okay, it was not on this one. It was maybe New Zealand CAD. So let's carry on with the rest of the pound pairs. So pound US dollar. I'm going to show you next week of, as I said when I started, that we're going to do historical pairs. So I'm going to do a pound pair in the coming week. Show you there's a 3,000 pip trade here on the pound pair for the year. Obviously not in one go. You know, people get excited when we talk a lot of pips. But there's 3,000 pip trade on pound USD. So last week, I keep saying last week, the last webinar I did was on the 18th. We didn't have anything in the during the Christmas break and the New Year. All right, so this structure has been quite complicated, but eventually it is starting to make so much sense. And this is where beginner waivers get a challenge. I'm going to show you on only this string. Okay, so here you've got an impulse, you've got a correction. That is impulse, correction, impulse. I'm going to indicate the corrections with red. See here, you've got a running flat. See here, after that running flat, you get this move to the upside. So what you have here is a 1, 2, 3, which is a W. W is 3 waves. 1, 2, 3, which is X. It's a connector. So you are getting another structure here. So this structure could be, if I'm doing it in red color, We've got an impulse here already. Could be 1, 2, 3. So pound can still push up further higher to come and give us this move. And all of this will just be a WXY. That is a zigzag in combination with possibly another zigzag like that. Now it has become very clear. But we know overall, pound is going to drop over 3,000 pips. And I'm going to show you during the week when I do the historical chart, the 3,000 pip trade to the downside, why I'm saying this is going to drop eventually. But you can see that so many things can still happen. We are on the daily chart. This is not going to happen tomorrow, next week, or next. So many things can still happen. But when it happens, we will know because it's going to give us the trigger. Okay, so that is pound. So if I go to the 4-hour, let's look at the last piece there. And then after this, we're going to talk about the trade of the week. So we have this here. We could be having this here, this here, this here, before another move higher. So it may come and retest this level here, this level, as you can see here. Let me just put that structure up. So this correction can just be to push this to come retest there before we move down and make that regular flat. You see, it's very clear. So we know that it's going to go down eventually, but when is it going to go down? Not yet. It's not ready yet for that. All right, so now, trade of the week, pound chief. Look at this one. It's got a very clear structure. So this is what we're going to be looking to take a trade on next week, pound chief. The guys in the premium group who have been trained, traders in the our traders already got this analysis. So let's go daily here. What are you looking at for this one? Are you looking to buy or are you looking to sell? Okay. It is making an ending diagonal. You can all see that it's making an ending, sort of an ending diagonal there. Let's do the straight lines. Ending diagonal there. Okay. Like an ending diagonal. Okay. So if you look at this, look at these fractals here. There's this pattern that we've been talking about. We're calling it the V pattern in our group now, where you get an impulse and then it slows down. See here, it slowed down. And after slowing down, I should have shown it in the other pairs. It just moves with a strong impulse to the downside. But look now, what has happened? You got another one. Are you going to miss this one? You are not going to miss this one. But the challenge is, when are you going to pull the trigger? And that's what the benefit that the guys in our group get, when to pull the trigger. So you've got this, and remember this is a daily chart. There's a potential 400 pip to come retest this level. Okay, so this will be 1, 2, 3, 4, 5. Okay, so if this is a 5, we're going to get an A, B, C before we get a move, before we get a further move higher. But this is way ahead of forecast. So we focus to what we can see right now. So this is the trade of the week. So two things could happen here. Let's go to the 4-hour and look at this piece here. Running out of time, I actually want to do Bitcoin and the other cryptocurrencies. Right, so this is what you have on the 4-hour. 4-hour. Usually this pattern happens with strong divergence. We already have it. We already have the divergence. There it is. You're getting the divergence there. So two things could happen here. Either this comes and do this, comes down, then it goes. Or it can just go up here, corrects, and then it goes. So 2 options. We're going to be watching the 2 options. But this is the trade of the week. Anticipating a move up on this pair. Okay, let's do the rest of the pound pairs. Pound JPY we already did. Pound CAD. Pound CAD looks pretty interesting because now after this move here, we had the impulsive move down, we had an impulsive move up, and that impulsive move had a 3 waves correction. So that could be, it could make a running flat or an expanding flat like that. So we'll be looking for a strong move up, similar to what we're looking at on pound chief as well. Strong move up on this pair. This is the 4 hours. So we'll look for reversal signs here. We're getting divergence. You see here, made a lower low, getting divergence here. Okay, so we'll be looking for this move on pound CAD. Pound New Zealand. Pound New Zealand, you can see impulse and our pattern again. Slow down, doing the same move, could come down here. When it breaks out, only when it breaks out, it will give us a confirmation move up, similar to pound chief. Okay, so as much as pound is looking bearish, there may be one move up before we actually go down. New Zealand, similar to pound, Audi is doing the same thing. Pound Audi slowing down like that. Currently, we've got this looking like it's going to go down first before we get that move down up. Remember, all of these forecasts have got confirmations. You don't just pull the trigger because I said it's going to go up. Now you go buy everything or sell everything. Right? So we've got triggers and confirmations for this. So let's go to the 1 hour. There's so much happening here. You need to understand even these small corrections. When you've been trained, you will understand what is going on with the small corrections instead of just trading breakouts. Okay, so you've got an impulse. You've got 1, 2. Okay, if I had to go in detail on this one, you've got an impulse, you've got an impulse, got an impulse in green, getting another one in purple. Only the purple starts the correction. Then you may still get one purple up, and then you get one green down before you actually complete that yellow. All right, then that will then be completed for the move down. Okay, so you need to keep an eye on how this will develop for a one move down before we get that move to the upside that we're looking for. Okay, that's pound New Zealand, pound Audi. We did all the pound pairs. Now let's do all the euro pairs. Euro New Zealand. Okay, Euro New Zealand could be doing something like this. This is on the 1 hour. Let's go for hour. Okay. Impulse 1, 2, 3. Another impulse is possible before we go down. That is Euro New Zealand. It is currently bearish. So we may get one move up before we go down. Okay, that's Euro New Zealand, Euro Audi. Euro Audi. Euro Audi, almost the same pattern as well. Again, you can see that it's selling with this diagonal here. We'll be anticipating one more move up, possibly to come retest over there before another move down. So we'll be watching Euro New Zealand playing out like that. sorry, euro hourly. Okay, euro chief. Euro chief now. We're looking at euro chief. It's a diagonal. You can see there, see over there. So we may still get one more down before we get the last move. So if we'll be looking at this one like this together to give us one more move to the upside. So that's all the euros. CAD chief. So CAD chief, I did this one when I did the video how to trade the WXY. So you can see here 1, 2, 3. It's making another 1, 2, 3. If it takes there, we may get a strong impulse to the downside. So we may get this move to the downside soon. Yeah, but we need to keep an eye and see how it plays out. If it starts doing this, then we're gonna get a continuation there. Okay, so this is related to oil. So I think I'm gonna do the rest of the pairs. I'm just gonna do New Zealand chief and then do oil and the cryptocurrencies, because otherwise this is gonna be too long. Let's just do New Zealand chief, just as to show the theme of the New Zealand pairs. You can see here New Zealand chief has got this structure here. 1, 1, 2, 3, running flat. We're still anticipating more upside on this one here. Okay, so we're still anticipating more upside. So keep getting these continuation patterns to the upside. New Zealand chief and oil. Look at oil. Right, so oil on a daily, according to the cycle and the sequence, it can reverse anytime now. So this is how we've been looking at oil all along. I've been projecting 68 area. Okay, let's see how oil is playing out there. It's actually a very nice setup when we traded this. Okay, it's busy loading. There we go. So oil, we had impulse to the downside, and then we had this flat correction in the middle. So what we were looking at was a 1, 2, and then a 3. So we're looking for this move to be equals to this move. And this move was going to be equals to that one at 68. But at the moment, there's nothing that stops this from reversing. You're getting divergence, you're getting divergence. So just be careful with divergence. It doesn't mean overall reversal. It may just be pullback for one more up. Okay, so that's how oil is. So just keep buying the pullbacks. I showed in the previous videos that whenever you get these pullbacks, corrections, you keep buying oil. Okay, and lastly, let us do the cryptocurrencies. Bitcoin, big one. To Bitcoin. I think we've got about 5 minutes on the webinar. I don't like going beyond 1.5 hours, so I'm going to go 4 hour here. Okay, it's loading a bit slow now. Okay, we are done. There we go. All right, so Bitcoin has been on a rally. As we all know, all the cryptocurrencies have been on the rally. So last week, I posted when I came back from holiday that we're going to get a regular flat here, and then we go. But this actually turned out, I actually thought it was going to be a running flat. This turned out to be an expanding flat. As you can see, it has played out perfectly. And then it gave you an opportunity to buy here after the reversal, another opportunity to buy, that's giving you another opportunity to buy. So what could happen here with Bitcoin, it could do this. Remember here, this is your impulse. This is your 1, 2, and then a 3. So this 3 comes there. We come back down here, give you a regular flat. If it comes down to around the 10,000 area, that will be another big opportunity to hop onto Bitcoin. But for now, we're buying these continuation patterns. Right now, you're getting another one here. So when this one breaks to the upside, you keep buying. But just be careful when you get to this area. You may get a reversal all the way back down to the 10,000 area. Okay, Litecoin is doing the same thing. The nice thing about these cryptocurrencies is for those that are impatient, that don't like waiting for trades to play out. This one's actually play out quite quick. So it's exactly the same setup with Litecoin and Bitcoin. As you can see, impulse, and then you get a correction here, which is almost an expanding flat or regular flat, and then you get further move to the upside. You can see we're trending in 3 waves there. So you may get a deeper one that will take you all the way up there, giving you this 1, 2, 3. Get this big corrective structure. It's going sideways now, as you can see. And I like this sideways movement because I can follow them and check where they end. And when they end, that's where you get a trade. So right now, what are you getting? You're getting this 1, 2, 3. Could be a 3-wave pullback for another move to the upside. Okay. All right. So somebody has asked for AudiCAD. I'm going to do AudiCAD after doing Ethereum and Ripple. Okay. So also Euro GBP. Okay, so there's a couple of ones that you guys are looking for that I'll do just now. Maybe some I'm gonna do when after stopping the recording because it's gonna be way too long now. Okay, so that is Litecoin, Ethereum, and now okay, this is Ethereum. You're still loading it up. Okay, so this one. Let's wait for it to load. So this is what you keep doing with this one here. There's a big there we go. And now load it. So as you can see here, the only time that we had a sideways correction was when it did this here. So we had 1, 2, 3 waves correction, 1, 2, 3. Here, same thing, 1, 3 waves pullback. So what you need here now is to check for any continuation pattern. Okay, looks like there is divergence here. But that divergence doesn't mean anything. It may just mean that you're going to get another continuation pattern as the rest of the other cryptocurrencies. Ripple has been rallying very hard while the Bitcoin and the other cryptocurrencies were going down. I think it made over 300%. It tripled actually from around $1, from around 1 to the dollar to about 3. So while some people are focusing on Bitcoin and these other cryptocurrencies, these ones that are still very cheap that you can still buy. So this is Ripple. I think it's the first biggest currency right now in terms of market cap. So you get 1, 2, 3. You're getting 1, 2, 3 here. So this may also go sideways. If it does go sideways, we're buying around the 2 area now. It will give us an opportunity to buy around this 2 area. All right. Okay, I think let's do the 2 pairs that were requested. Euro GBP. And then that will be the end of the webinar. Daily. So I'm going to do Euro Pound and Audi CAD. Right, so this one is actually quite interesting. As you can see here, we're getting the same structure. That structure where this pairs just slow down. Impulse down, then it slows down. Okay. And then you see that we're getting divergence there. Somebody in the group was actually saying that it looks like it's lacking in momentum. It does look so, but sometimes you don't just look at the personality. You need to understand the structure and the wave count here. So we've got an impulse down. So remember, I did that with one pair that I wanted to buy. I said it looked like it was lazy, didn't want to go up. And after that, it actually just went the direction that I was forecasting, because I was only looking at the personality and ignoring the structure. And the structure is more powerful than the personality. You can see here, it looks very corrective. Okay, but it may just be doing something like this, and then it comes to this level. Actually, that should not be in that color. It should be in red. Okay. If this is good, there's no setup for a sell here, as much as this looks weak. The structure is supposed to go retest this level here for another move down. So this is how we've been forecasting this one. Impulse, not like that. This was A, B, and then a C on pound. So look out for this correction here. It may complete and be a proper, decent correction that is understandable for a move to the upside. Right now, it is not clear. Okay, wait for it to be clear, then you can take the trade. Audi CAD, last one. Let's do Audi CAD. Audi CAD, you've got this move up. You've got 1, 2, we're getting this correction here. This one is easy. Just look for a break of this structure. Look for a break of this structure, because you've got an impulse, you've got an impulse, and then you're going to get not like that. Sorry, that should not be the yellow, it should be the red. You're going to get the red like that. And then if this is you see here, you've got an impulse, you've got another impulse. All of this is connecting 1, 2, 3. So you're getting this green. We're messing it up now. Let's do it clearly and slowly. You've got an impulse. You do not get a correction. You get an impulse in red. So what you're going to get after the red correction is another red. Okay, after that red, only then will you get the yellow down. Okay, for now, don't worry about the yellow down. Focus on getting this trade to the upside. If you get a continuation pattern here, break of this channel, it's actually a very nice trade here to the upside. Thanks for bringing it up. All right, so that completes our first webinar for 2018. I hope you guys enjoyed it and you're going to make money out of it. Don't forget Pound Chief. Obviously, check that. I'm giving you the disclaimer. I'm not going to read it out. You know, I'm not responsible for the trades that you take. You take it based on your own strategy. Here, I'm focusing the direction of the market. If you are not in our group, I understand that you are probably a professional trader who knows, well, has a strategy, who just wants a tip right there and there to improve your strategy. Okay. On that note, we actually have traders who've been trading for 10 years that have actually joined my course and have found it to be very productive. Okay. On that note, thank you guys for attending and watching. Please share the link. Would appreciate it. Thank you very much. I'm going to stop here on YouTube.